Hi, I'm Rob from Morgan Keane, and in this web series we're going to talk to you about making tax digital for income tax and the different software you can use to help facilitate those changes. Making Tax Digital, or MTD for short, is an initiative introduced by HMRC to digitise the tax system and make it more efficient, effective and simpler for businesses. The idea behind MTD is that businesses will maintain digital records and submit taxes directly to HMRC using MTD compatible software. This will streamline the tax reporting process, reduce errors and enable real-time visibility of tax obligations. MTD is a major shift in how businesses manage their finances and report taxes in the UK, so it's important for them to stay informed about the regulations and requirements. But overall, the goal of MTD is to make tax management easier and more transparent for both businesses and HMRC. However, that's not the only reason to digitise your business. It's also helpful as a business owner to know in real time how your business is performing. So, who are Coconut? Coconut describe themselves as the accounting tax app for landlords and self-employed people. Coconut's simple tax app helps self-employed people track income, manage invoicing and monitor expenses, which it uses to calculate your tax due. Today, we're going to look into the MTD offering provided by Coconut and the pros and cons of their software. We're joined by Devon from Coconut, who will go through the offering, and at the end, I'll summarise my thoughts in an honest review from our client's perspective.
Welcome everyone, my name's Devon and I'm the account manager here at Coconut, and today I'm going to be talking a little bit about MTD ITSA and Coconut for you guys. So, making tax digital for income and everything you need to know about the change that will be happening now in 2026. So, some of you may remember back in December of 2022, HMRC announced that it will be delaying the introduction of MTD ITSA until April 2026, and that it will also be changing the income thresholds for eligibility. So, just a quick reminder of what making tax digital for income is. So, the shorthand MTD ITSA is a government scheme that will change the way individuals complete their self-assessments, and taxpayers who fall under the scheme will have to use a digital product to track their income and their expenses, and also to submit their tax returns every quarter now instead of once a year. So this will only affect those earning a certain amount from self-employment and property, and I'll talk a little bit more about that as we move on. I am going to share an article which is our complete guide to making tax digital for income tax with Morgan Keane, who can share that with you either in the webinar or at the end of the webinar. So, what has HMRC changed? As I previously mentioned, MTD ITSA was due to come into effect in April 2024. But in December 2022, HMRC announced that it's going to be delayed by 2 years and is now to be introduced in April 2026. It was also announced that the threshold for eligible individuals will increase from £10,000 to £50,000, with those earning more than £30,000 mandated to join the scheme in 2027. So, what does making tax digital delay mean for sole traders, landlords and accountants? So, sole traders, landlords and their tax advisors, in your case Morgan Keane, now have 2 extra years to prepare for MTD ITSA. However, here at Coconut, we highly recommend getting on board as soon as possible and kind of coming to terms with what these changes are going to mean, and obviously being prepared in terms of what you're going to be using moving forward. So the threshold increase also means that fewer sole traders and landlords will fall under the scheme in the initial phases, because as it stands, being MTD compliant will only be compulsory for those earning over £50,000 from April 2026, and then those earning more than £30,000 will come in from April 2027. So, do you need to do anything right now? In short, no. However, as I mentioned, we do believe that getting ahead of the game and kind of making sure you're really prepared for MTD is the best way to make a smooth transition for when it does affect you. So if you're earning more than £30,000 from self-employment and or property income, you do have the extra time now, the extra 2 or 3 years to prepare for MTD ITSA. And in the meantime, you need to continue filing your self-assessments yearly, just as you have been doing before. That said, there are many additional benefits to using a digital product like Coconut to manage your self-employment and property finances, even if it's not required by HMRC. So Coconut's app makes it really easy for sole traders and landlords to track income, categorise expenses, send invoices, and work out how much tax to set aside with our tax estimate, so that you can get your finances organised, spend less time on bookkeeping, and build a strong foundation for you and for your business. And Coconut also makes it really easy for you to work with your accountant or bookkeeper. In this case, that would be Morgan Keane. So once they've invited you through the accountant portal, you'll receive your invite and you can sign up. I imagine some of you already are signed up to Coconut and have currently been using us. So they'll have access to all your business activity and your bookkeeping data whenever they need to use it. And it just saves them a lot of time, it saves them a lot of energy, and saves you time and energy as well, because it stops with any back and forth emails and queries. They're not searching frantically for receipts and things like that. It's quite seamless and just makes things a little bit less stressful for you and for them.
Thank you, Devon. So here are my thoughts on Coconut. The first pro is that Coconut is a popular choice for freelancers and landlords because it has templates for both different income streams. The second pro is that Coconut's intuitive design makes it easier for small business owners to manage their finances and stay on top of their profit. The third pro is that Coconut includes features like invoicing, expense tracking, and tax management, which make it a one-stop shop for small businesses. And the final pro is that Coconut is the cheapest option out of the platforms that we're reviewing in this series. However, there are some cons. Coconut has limited functionality, so it may not have all the features that larger businesses may require, such as multi-currency support, advanced reporting, or detailed VAT capabilities. And also, whilst it gives you a rough estimate of tax, it's still worth talking to a tax specialist before you submit anything. My final thoughts is that I would recommend this for landlords, people that aren't interested in a lot of detail, and anyone that's not fond of technology. I wouldn't recommend it for anyone that is VAT registered, has any kind of complex sales, or a complex inventory system. Finally, I'd give it 4 out of 5 stars. Thank you for your time. I'm Rob from Morgan Keane. Stay tuned for more webinars discussing QuickBooks and Xero. And if you have any queries about digitising your business, email us hello@morgankeane.co.uk or visit our website for more details, morgankeane.co.uk.